Hey folks, silver just broke past $70 per ounce. Take a look at the price chart. We just saw a 100% gain in just 6 months. Silver has been on fire lately, and whenever we see price action like this, the same thing happens over and over again, like clockwork. New interest, new money, and a lot of inexperienced people entering the arena looking for ways to invest in silver. And in this video, we're gonna go over 4 of the most popular ways people invest in silver. All right, so let's begin. Let's start with physical silver. Physical silver is basically the foundation. Coins, bars, metal you can actually touch. This is silver outside the financial system. It has no counterparty risk, which basically means it doesn't depend on a bank or a broker or a functioning system to exist. Another great feature is liquidity in crisis situations. It's very high for physical silver, especially with small bars and coins. It can literally function in a barter system if we get to that kind of chaos. So for those reasons, nothing matches physical silver in terms of something that you can trust in times of crisis. But here's my personal take right up front. I don't expect it to 10x in purchasing power from where we are now. I don't expect it to outperform stocks. It won't. I treat it as insurance against runaway inflation, currency debasement, and the possibility, not certainty, but the possibility of a dollar crisis. So it's not about returns. It's about sleeping well. You know, historically, people rush into physical metal after systems break. So I bought physical silver to protect me in such a crazy economic situation. And I've studied history, and history tells me that, you know, these things never end well. When a government goes into a fiat currency system like the US dollar, it's not a good situation. Just ask ancient Rome. And that brings us to silver investment vehicle number 2, mining stocks. Yes, it's my favorite, I'll admit it. This is where leverage enters the picture. When silver rises, well-run mining companies can literally mint money. And I mean literally, because silver eventually will be restored as a monetary base, as it has been for thousands of years. As the price of silver goes up, the costs of these mining companies stay relatively fixed. And that's when we see their revenues absolutely explode. And of course, this cuts both ways. I get it. Mining stocks come with management risk and government regulatory risks. So yes, unlike physical silver, the counterparty risk is real. And my personal take is silver mining company stocks is where the bulk of my investment is. And as much as I like physical silver, just the tactile part of it, you eventually feel like it's just too much of a physical asset to look after. And again, once you have enough, you just don't feel as much of a need for it. At least in my view, I know that's not what everyone believes, but I believe big time in silver entering a sustained bull run. And in that situation, strong mining companies thrive. But only if the company is financially responsible, management is disciplined, and dilution risk is low for that particular company. This is not a set it and forget it type of investment. When it comes to investing in individual mining companies, you have to do your own due diligence. And with that said, we move on to silver ETFs. The most popular silver ETF is SLV, which is a fund traded on the stock exchange that gives you price exposure to silver without taking delivery of the physical metal. ETFs is where most money goes first. People who see big gains in silver decide, okay, well, I don't want this old school physical metal. I'll just buy an ETF. ETFs are easy, one click and you're done. Just like buying a stock. But let's be clear about what you actually own. You own shares, not the actual metal. ETFs depends on custodians, financial structures, markets functioning properly, and in calm conditions, it's fine, but in stress, all bets are off. Stackers have very little trust in ETFs because they believe that the paper silver markets massively outweigh physical silver, with estimates often suggesting dozens or even hundreds of paper claims for every real ounce claimed. My personal take here is simple. ETFs do not fit how I think about counterparty risk. If my goal is to hedge systemic issues, I don't want layers of promises. I'd rather own the metal or own businesses producing the metal than to simply own paper exposure to it. That doesn't mean ETFs are useless. They're just not consistent with my framework. Okay, and then the last and perhaps least, futures and options. Futures and options are pure leverage. Futures and options are essentially contracts that give you exposure to silver's price using leverage, meaning you control a large amount of paper silver with a relatively small amount of money. They're financial contracts that you bet on for the future price of silver instead of owning the metal itself. Now, you can get massive upside with relatively little capital here, but you're just playing the swings and you're subjected to margin rules and forced liquidations. You can be right about silver and still lose everything if you mistime things. So this is where I draw a hard line. I don't participate in this type of investment at all. I see it as a casino. I don't gamble with money I don't have, and I don't put myself in positions where timing matters more than being right on the investment itself. This isn't a debate for me. I only bring it up to advise people to steer clear of it. Okay, so now just to visualize the strengths and weaknesses of the entire investment landscape, let's go to the Silver Investment Vehicle Scorecard. You can pause the video to take a good look, but basically physical silver dominates trust. It's honest money, stable, and as safe as possible. This will never go to zero. And if you believe strongly in the overall silver thesis, mining stocks dominate upside potential. But of course, it comes with some risks. So it pays to diversify and do your research on all the companies you invest in. And ETFs might be cleaner than owning physical metal, but in a crisis situation, you just never know. Paper promises can break under stress, let's just say. And again, futures and options are an all or nothing type of play and not even worth talking about. And there you have it. 4 ways, same metal, 4 completely different games. How you play it depends on you. For me, like I said, I like physical silver because it gives me safety and peace of mind. I also like mining stocks because it gives me something to get excited about, the prospect of massive gains. So what about you? Where are you on this ladder? Physical, miners, ETFs, or something else? Drop your take in the comments. And don't forget to like, share, and subscribe. Thanks for watching, and I'll see you in the next one.